All right. All right, thank you all for coming today. I'm going to talk while y'all are eating. Hope everyone got a lunch. I'm not sure. Should I leave the mask on? Can everyone hear me okay? Very good? Okay. All right, so thank you for coming to GAWN Luncheon today. I know it's a new location. It might be out of the way for some of you. We normally meet at the Sweetwater, but there was a scheduling conflict this month. So we had to try somewhere new. We also wanted to see what a new location would be like and get your thoughts on the location as far as if it's convenient for you or if you like it. Please let us know. So we will be resuming at Sweetwater next month. Thank you all for coming. We are having a panel of financial experts for you today. They will come up here. I'm going to ask them some questions, and then when we're finished, you all can ask them some questions. We'll have a Q&A afterwards. So GAWN's purpose, and if you're a first-time guest here today, is we are an organization that promotes a spirit of cooperation and support among women and those who support or promote women in business. We provide a strong network of business contacts and enhance members' professional and also personal development. So that's what we stand for, women in business and anyone who promotes or supports women in business. We try to, at the beginning of the lunches, your time to network. We have speakers, but then some months we try to just network to get everyone to talk more and engage. With COVID, it's been really different. We had a couple of months online. We will continue to do them online, but we've had some technical difficulties. I know last month didn't come through at all, even though we had the visual up there, that no one could hear us. This month we had some issues. I don't think we're able to stream live, but we are trying to record and see how it sounds and eventually post it on our website or our Facebook page. So other members that weren't here today, even though they're not able to hear it live, they're still able to hear from our wonderful speakers, and you get a chance to reach all the members of GAWN versus just the people that are here today. Some general announcements. We will be having a social next month on November 5th. We are going to socially distance and wear masks and be safe. It will be outdoors at the Relaxed Salt Room. They are a member here. I think she's going to have us outside, and then maybe individuals will be able to tour through her location one at a time, so we're not all bunched in there together. But we still want to be able to, have some holiday fun, and hope you'll come out for that. Up next, we have some new members this month. And I apologize if you've been a member. It doesn't tell me if you just now joined or if you renewed for membership. But we had 5 new members within the last couple of days. We have Kristen Adams, and she is with Avita Health. If you're here today, is Kristen here? All right. Corey Cheval with Open Spaces International. Is Corey here? Hi, Corey. Thank you. We have Sarah Crest with Open Spaces International. Jillian Diaz Pereira with Gator CPR. Robin Geiger with Gator CPR. And I believe that's it. Where I'm cut off. We have, I'm sorry, now is the time we're going to do member recognition. I know it's COVID, and I don't know how much networking or business you've been doing. Hopefully your business is still going well. Does anyone have any success stories you would like to share doing business with anyone within GAWN, any fellow members? It went well. I'll start. I just recently sold my home and bought a new home, and Christy Moffitt, our fellow member with Brightway Insurance, did our homeowners insurance, and she was fantastic from the point of contact through closing and follow-up and all the information. So thank you, Christy. Anyone else? Any? Joanne?
So I have two. Back to December, so after the last meeting, what day she gave me that Lazy Susan, the person that I talked about, who was so happy and came to the next couple of days to pick up. And I have a friend who is on at board in Georgia, and she asked if she could talk to Ben, and so Ben spent some time with her on the phone, because they're very small and they needed some help. And so it was really great. So thank you.
Awesome. Thank you. Thank you for sharing. All right, so we are doing door prizes. Is anyone handing out business cards anymore? Yes. Okay, so last month what we did was hand out an Amazon gift card electronically via text. We did, remember, we drew a name afterwards and texted out. I do have a physical gift card this month. I don't know how you feel about me giving it to you, but I would need your business cards if everyone has one. If not, we'll do one after the meeting. Okay. Yes? Does anyone have business cards? Yeah. Everyone? Okay, let's do it. Yeah. Would you mind?
We need to select in something.
Christine is going to collect them. We had two today, so. I know everyone could use an Amazon gift card. All right, I'm going to draw two. All right, Jenny Whitson with Rodin Field. All right, Jenny, you have $25 to Amazon. Congratulations. Now the grand prize. Ben Phillips with Focus Real Estate. All right. Who's ready to hear from our panel? Anyone think they know everything there is to know about finance? I certainly do not. All right, so I don't know if everyone's finished eating, if we are ready or if we need a few more minutes. Yes? We're going to have you come up here. Stand. Yeah. Yes, please.
You want GHP to go one time, they're ready.
What?
GHP is ready.
Oh, I'm so sorry. Yes, I'm sorry. Joanne, Miss Joanne Wilson's going to come up with Displaced Homemakers program and tell us how much she loves her job. I'm sorry.
I still absolutely love my job.
And so I have a guest with me today, but I wanted to give you a little brief rundown. We have been open, our office has been open, and we've had quite a few people come in. And so I wanted to tell you that we have, for this fall semester, we have 5 women who are taking full-time classes. We have 9 who are getting their GEDs. And then we were able to help 7 people with their books. And so GAWN is all part of that, and we do appreciate that. The other thing we have found is that our food pantry has taken a hit, as you can well imagine. So any donations towards the food pantry, we'll make sure that we make sure that it's equipped with those things that are little cans of meat and all the other stuff that we will figure that out. So I have a guest today. Her name is Cindy Salvatore. She's going to tell you a little bit about herself.
I came to the Displaced Homemaker program in 2017. I was in the early part of getting a divorce. I'm originally from Gainesville, but after I married, I lived 23 years in Delaware. And when I separated from my husband, moved back to Florida, his friend gave me a place to live, and I have family here. And I have to be honest, when someone mentioned to me that I qualified for the Displaced Homemaker program, I was a little sad because my idea of the Displaced Homemaker program was that it was for women who couldn't balance their checking accounts. Yeah. And I had been an accountant. I have a business degree from the University of Florida. I can balance corporate checking accounts. But I had not worked for 10 years, and my computer skills were out of date. The interview process had changed. Resumes had changed. So I needed help with all of those things, and the program certainly gave me those. Karen, brought my computer skills up to date. Joanne and Karen went through, we did interviews together. They always helped to prepare me for those. But the real thing, the main thing that the program gave me was structure. I had a place to go every day, and I had a schedule. I would go to classes, and then I would sit in the computer lab the rest of the day. And I did that throughout the program and afterwards. But once Joanne asked me to speak today, I was really reflecting on what it had, the main thing that the program had meant to me, and it was that it gave me worth. It reminded me of my worth. And I think that's what women need so desperately at that time in their lives. So I now work at Santa Fe. I've been there 3 years. I'm an admin assistant in the counseling center, and I love my job. And I'm self-sufficient. And the thing about the program is it's ongoing. I go to Joanne and Karen all the time for advice, to help me process emotional things I'm going through. And a friend told me the other day, she said, I don't think you would have gone through with your divorce. I don't think you would have stuck it out if it wasn't for that program. And I think that's true. So I'm truly grateful.
Thank you so much for sharing, Cindy. I don't know what Joanne is doing, but I want to work with you because everyone that works with you loves their job. All right, so we have a financial panel for you today. We have 4 awesome financial experts in the Gainesville area. We have Jane Harris, a VP Business Relationship Manager at Florida Credit Union. Jane, you have up here. We have Ms. Deanna Edwards, Financial Advisor at Thrivent Financial. We have Ms. Karen Harvey, Financial Planner at Ameriprise. And Ms. Catherine Lancaster, Financial Advisor at Edward Jones Investments. starting with you, Jane, if you would give us just an intro, background of yourself, your experience, and then we'll get started with some questions.
Okay, my name is Jane Harris, I'm VP of Commercial Services at Florida Credit Union. I've been in the financial industry, gosh, for about 17 years. I started when I was 10. What I do is help, and I build relationships with business owners to help them reach their goals, either by saving money or helping them with loans for expanding their business or refinancing. We are very busy this year. Florida Credit Union was kind of one of the first local banks out of the gate that helped our community with PPP loans. Probably putting about 100 hours in the months of April and May. Right now, we're continuing to be busy. Some of our competitors are not accepting new commercial loan requests because of the current pandemic. And we're having a record year. Rates are low, and unfortunately, deposit rates are low too. But there are quite a few businesses that have continued to grow faster than the past during this pandemic. So I enjoy what I do. I love helping business owners and building relationships with them. They almost become like family and friends.
So I'm Deanna Edwards, and I'm with Diamond Financial and have been with them for almost 15 years now. We are a faith-based not-for-profit, so we take a Christian overview when we talk about money. We do full financial planning. We have fee-based planning. We have all the different types of products and services that you could possibly want. But the biggest thing is we are there for the relationship. We want to help guide you through this very difficult thing called finances, and hopefully help build that relationship and help keep that within your Christian values, and be able to help through that process. I really enjoy the process. This whole COVID thing has made it difficult because we are a relationship business, but we've become technology experts over this time to be able to help those people. Because anybody, no matter what phase in life you are in, could use talking to somebody who does this for a living. As they say, you wouldn't necessarily do your own dentistry or your own attorney work and that sort of stuff. So we're here to help and know that. And you don't have to have hundreds of thousands of dollars to come see a financial advisor. So know that we're here, and we'd love to sit down and talk with you for that.
Hello, everyone. I'm Karen Harvey. Before I introduce myself and my business, I just want to say I've been a GAWN member since 2006. I'm ashamed that I haven't been to meetings lately and see a lot of new faces. So it's great to be here. But my name is Karen Harvey. I'm a financial planner with Ameriprise Financial. I've been doing this for 25 or so years. I kind of stopped counting. If you haven't heard of Ameriprise, we're a 125-year-old company plus. We started with the Great Depression and survived that. Now we're dealing with COVID. We've been through everything in between. But we focus on financial planning and brokerage services for individuals mostly versus businesses. But we look at, what's your entire financial life, what are your goals, and then what do we need to do to help you achieve your goals. I do work as a fiduciary, so I'm always have the client's best interest at top of mind.
I'm Catherine Lancaster. I am a financial advisor with Edward Jones Investments, and I listen to my clients to find out what's important to them. And based upon what's important to my clients, I use the Edward Jones resources and strategies that we have to help them create a strategy that's going to help them reach the goals that are important to them. And so today I brought up one particular goal, which is education. And the reason that's sort of top of mind is because I've invited my son today as a guest. He's recording. So I've been a financial advisor with Edward Jones since I left the practice of law in 2011. I practiced law for 25 years before I became a financial advisor. And I wanted to be a financial advisor because I wanted to help people, when I studied about the Great Depression in high school, learning how so many good people had put money into the market, thinking they were copying the wealthy people, and then they left the market thinking that it was worthless and not understanding how it works. I wanted to help everyday people. And so I moved to the Gainesville area with my family in 1996 with my husband and my 2 sons. And I'm just like super proud because both of my sons have graduated from college now with more than one bachelor's degree. And they are debt free. So that's sort of the topic I was going to share today is college and how to pay for college. Thank you.
Thank you. All right, our first question is for Jane. Jane, what is the difference between a credit union and a bank?
Okay. That is a question we get posed through quite a bit. The difference between a credit union and a bank, banks are just like you're a private company that has to answer to their shareholders. So, their shareholders could be, for instance, there's a bank in town that's owned by basically one gentleman and a little bit, his son has the other, but that's kind of not the norm. So shareholders would be, anyone that has invested into the company, whether by buying stocks or, an equity contribution or so forth. Credit unions are member owned. So if you have an account with a credit union, then you are an owner. Credit unions typically have an annual meeting every year, invite their members who are the owners to talk about how the credit union has done business for the past year. Everybody has a voice. The credit union, Florida Credit Union currently has just over 90,000 members. We've been a credit union since 1954 in this community. Oh, one thing I do want to add because it pertains to loans, and I'm a commercial lender. Credit unions typically, as you know, everybody thinks, oh, let me go to credit union for a car loan because I know that they're always cheaper. Well, that can be true and cannot. Most of the time it is, but a lot of times people forget that credit unions do also have the flexibility to make local loan decisions, whether it be on a consumer basis or commercial. What's nice, where Florida Credit Unions, we have our senior VPs are the decision makers for the commercial loans. They live and work in our community, compared to banks where you go to, a national bank, and if you got to fit in this box, and if you have a little bit outside the box over here, then, they say no, they decline the loan. What's nice is with the local lending authority, we have the flexibility to present the loan as long as it makes sense, whether it's outside the box a little bit or not, then we have the flexibility to help our client and approve the loan.
Thank you. Next question is for Deanna Edwards. What is the biggest mistake that people make in retirement?
Okay. In retirement planning, and to narrow that down to just one is tough, but probably I'd say the top 3 ones are basically underestimating their costs in retirement. A lot of people think, oh, I'm going to retire and all these expenses are going to go away, which they really don't, especially if you're very active. The expenses there, expenses for healthcare, especially if you retire under age 65, and then, knowing that Medicare supplement also is needed even if you're at age 65. The other long-term care is another portion of those expenses that people don't factor in, that if you get sick or need help, that isn't covered by your regular health insurance. So you would have to have either a separate policy or monies to pay for that additional care. Taxes are the other big thing. People realizing if you're a really good saver, taxes are a good thing. Is how our economy, grows, how the government gets their revenue and everything. but as we like to say, pay unto Caesar what Caesar is due, not anymore. So being wise about when transitioning taxable monies to non-taxable money is probably the other thing that a lot of people will just sit on those dollars and create what we call tax time bomb at required minimum distribution age, which just now is moved to age 72. So these are all things that working with somebody can help hopefully alleviate. But those are kind of the two big ones, and then also timing. Realizing we're dollar cost averaging hopefully into the market as we put assets in for growth. To just turn around and take money out the same way can be very devastating, especially in a down market in the first few years. So having a plan in place for weathering those storms is really important. But that's usually what people say, oh, I'll just take it out. You know? And most of them will fail because they don't realize that, again, taking money out with just, you know, with no plan in place, that it can actually very devastating. So I'd say those would be the top.
Thank you. Our next question is for Karen Harvey. How do you measure success with regards to your clients' investments?
Yeah, so rarely is a good measure, which most people think of, is how am I keeping up with markets? I focus more on how are my clients progressing towards their goals. Of course, yes, we look at market investment performance, and I manage that benchmark and show my clients frequently. But more importantly, are you on track to send your child to college when they graduate high school? Are you going to be able to retire when you want to and do the things that you want to do with retirement? That's more of a measure. And then if you're not on track to do those things, what do we need to do to get you on track for meeting those goals? So it is all more of creating a plan and sticking to that plan. It's an ongoing process, constantly reach the success at the end, reworking, making sure we're still on track to achieve those goals.
So not just how you're doing the market today, it goes up or down, but the overall bigger picture on how you're are you still inching towards your end goal?
Right. Are you going to be able to retire when you want? And if not, what do we need to do to make that happen?
Thank you. Ms. Catherine Lancaster. Sorry. All right. Why do all students need to complete?
I'm sorry, there's a question before that.
I'm sorry. Okay. Right now, the pandemic is causing chaos and uncertainty for colleges and students, but it won't always be that way. Individuals who have children heading off to school in the next few years will be thinking about more typical concerns such as expenses. How should they prepare to pay for high costs of higher education?
Thank you, Sarah. So most colleges offer financial aid packages that can greatly help with these expenses. But it pays to know well in advance how financial aid works. Because there's some planning that needs to be done. The key platform for determining major portions of financial aid is the free application for federal student aid, FAFSA, F-A-F-S-A. In fact, if you have students starting college next year, now is the time to get working on that FAFSA application, which came out on October 1st to be available for the 2021 and 22 years. And then there's a
Yeah, so why do all students need to complete the FAFSA?
in Florida, in order to qualify for Bright Futures, you have to do the FAFSA every year. And the FAFSA calculates what's known as the expected family contribution. They love acronyms. They call it the EFC, expected family contribution. And that calculation of the expected family contribution takes into account 4 separate areas. Parent income, parent assets, excluding retirement funds such as 401ks and IRAs, home equity, and small businesses. student income and student assets. So the expected family contribution, EFC, does not calculate the exact amount you must pay for college. It's an estimate of the amount that you can pay either below or above this number. And it's important to determining your financial aid package, and your actions will be influenced as a result.
All right, and what suggestions do you have for those who are saving for education in future years?
So there are 4 ways to prepare. Number 1, save money in your name, not in the child's name. FAFSA's just going to consider 5.64%, the tiny little percent, of the parent's assets, compared to 20%, a much larger percent, of the student's assets. And 2, be aware of how retirement plan contributions can affect age. So earlier I said that the 401ks and the IRAs are included. However, for the tax year that's occurring right ahead of your application, the voluntary contributions that you make into your 401k and your IRA during that time still get counted as income for purposes of the calculations. And the mandatory contributions, like people that are in the Florida retirement system and are required to do that 3%, that is not evident. The third thing to do is to avoid withdrawing from your 401k or your traditional IRA, because those are counted as ordinary income when you're trying to meet the qualifications. And fourth, consider having your children, if they have a job, put money into a Roth IRA. Children can contribute to a Roth IRA if they're earning money, and the money that's in the child's Roth IRA won't be counted towards the assets. Now, also keep in mind, though, if the child goes and takes the money out of that Roth IRA because they're still too young, and they haven't left it in there for 5 years, they're going to end up with another problem from that, too. In a nutshell, thank you.
Okay, thank you. All right, I have a couple of questions, as well as I'm sure you all do. Does anyone like to go first? Anyone have a question?
Yeah, so so currently I'm a college student. I'm only 20 years old, so I still file my FAFSA with my mother. But I am independent. So would you recommend I start putting money into a Roth IRA, because at some point I'm going to not qualify for FAFSA anymore to pay my education currently. So would you recommend for my future plan where I have to start to pay out of pocket, should I put that into a Roth IRA? What would be my smartest move?
So any money that you put into the Roth IRA, you're going to want to be prepared to, from the start, when you start that Roth, to leave the money alone for 5 years. Okay? So that's not always realistic. So sometimes at your age, because you're not a kid, it could be a good idea to instead put the money that you're making into a traditional IRA, if you're planning on using the money to finish school with. And the reason for that is that when you put the money into the traditional IRA, it gets deducted from your taxable income. Now, that still might, be counting some of this other stuff, but if you put it into the traditional IRA, it will get deducted from your current income. And then when you take the money out, there's an exception for taking money out of a traditional IRA and using it for school. There's an exception. You're allowed to take money out of traditional IRA and use it for school without paying a penalty. So if you're really serious about wanting to arrange it, just, give it a good financial advisor. We got a whole group up here, and meet with us. I can help you do a plan with it for free. So if you're really planning on doing it, there's a few landmines in here, so you do want to be working with a professional if you're doing this strategy, but it can be done. It can be very effective.
Anyone else?
So I already graduated with lots of debt, and I've been on the income-based repayment for 5 years, but I've been working for a nonprofit for the last 3 years. So I did the paperwork for the I forgot what it was called, but if you're working for a nonprofit and you, after 10 years, the debt's forgiven.
Yeah, forgiveness. Yeah, excellent.
Yeah, so I've heard stories where people say once they got to their 10 years, then it wasn't really forgiven, and, I mean, is that, like, for sure?
So you need to make sure that you're working for a qualified nonprofit that's recognized by the system. And you basically just need to make sure the I's are dotted and your T's are crossed, because if something like that doesn't come through, there was usually some major miscommunication and something didn't get done. And the way they are with the student debt, they're draconian with the way they collect. There's also some simply unethical debt companies out there for student loans. You want to make sure that none of your student loans are with any of these relatively predatory loan kind of entities. And it's going to be something that probably worth your time to meet with a Bennett, meet with people that do the loans back at your school and make sure that everything was set up right. You're not getting set up like that. You're right, some people can't get set up.
If I may suggest something, what I would suggest, because they do not have a tracking system formally for the loan forgiveness fees. So each year, at the end of each year, I would print out your payment history, keep it in your records for 10 years, so that you have your own documentation to prove that you've made on-time payments for those 10 years.
Absolutely, that's what I've heard from the ones that I've worked with there. And you may get denied the first time, but usually through a appeals process, the second time through, it's almost like they initially just say, go. Yeah. And then don't let it just go with that. Continue to keep doing that. And too, like the credit union and that sort of stuff, we actually have a credit union associated with us too. So we actually do a lot of student loan refinancing and everything. So that's one of the reasons why it's just to be able to do qualified schools and everything you can get some forgiveness with that too. So.
I have a question for Leanna. You said that people underestimate their spending for retirement. What would you say is the percentage of your current income that you need to, is there a percentage of what you currently make that you need to aspire to have for your retirement? Or is it less?
It almost depends on how active you are and how much you want to do. So there's really about 3 different phases for retirement. When you initially retire, what we call those are your go-go years. You're going and doing, you're visiting, you're most active, most probably involved in the community. A lot of times your expenses don't change a whole lot in that time frame where you're like, well, I won't spend as much in gas because I'm going to be driving to work. Actually, you will be because you're going around and doing a bunch of stuff. There's, again, that health insurance, and a bunch of other things that you do. So almost your income need, your budget need doesn't change a lot in the first few years. And then once you slow down a little bit, then it usually backs off by a little bit. And then what we call the no-go years, are when you're needing additional care, which has a totally different need. So, budget-wise, it's a totally different budget, so being able to be flexible within that, but I would figure on probably no less than about 75% of your current need for retirement. I mean, depending on what your income sources are. If you have pension and Social Security or these guaranteed income sources, it's a lot easier to figure out what the budget is going to be versus if you're doing it all just market-based and withdrawal percentages and that sort of stuff. So I would say usually 3 to 5 years out of retirement, we start redoing the budget and saying what's going to change so that they can start getting used to, because they're used to getting a paycheck. How is that going to change at retirement? That we go through that mental process of, all right, this is what my expenses are today. Imagining what that expenses are going to be, in retirement. I'd rather overestimate than underestimate any day, because having money left over is never bad. For that one. So,
Yes. In the states when things like Alzheimer's disease are really prevalent,
yes.
are you guys focusing on helping them to figure out ways to get long-term
place where they need it, money's just not there.
Absolutely, and actually, I talk long-term care starting with people in their 40s. Because one, it's the cheapest, you're most likely to be able to qualify for long-term care because you do have to go through medical underwriting. By the time somebody says, oh, I need long-term care, probably about 70% of those will never qualify because they've seen it. Now, especially if you have family history, you know, I bought my first long-term care policy when I was like 38. But I also have Alzheimer's and dementia along with 50s, all sorts of other stuff in my family history. So I'm looking at it, and longevity too, which is, I think, the next, one of the next biggest issues with our aging elderly is the fact that we're living longer and not necessarily healthier. So we're needing all this extra assistance. You see, not as much here, but especially in the villages, and then there's assisted living and all these things just popping up everywhere. But unless you have tons of money to pay for it, it is very expensive to do long-term care. Paying with a leveraged dollar, usually long-term care, the traditional long-term care that we use, because there's some hybrid type things, but traditional long-term care for males generally costs about a 15-cent dollar if you're talking about a leveraged dollar, and women is anywhere from 25 to 39 cents on the dollar. All day long, there's not an investment out there that I can guarantee that I'm going to have that kind of to pay for care. It's tax advantage because they're qualified plans, and it allows them to take control of where they go, who takes care of them, and you're not dependent on family or friends for that one. So yeah, long-term care is a very passionate thing for me, and I have that conversation with them all the time because it is something, one of the biggest derailers that people just don't even think about until it's too late.
I think it's just like for student aid, how you use a plan for the student aid. It can be, and no matter what your financial situation is, there's some people that they simply can't afford long-term care insurance. In which case, you still need to be planning for that event. You can set up in such a way so that if most of your assets, just like how the FAFSA disregards the IRAs, 401ks, Medicaid will disregard the same entities. So for some clients, the thing to do is just to put enough money into your retirement accounts that if you had to do a Medicaid send down for a long-term care situation, you know, you wouldn't have to be spending down every last penny. You would have something to go forward. But even then, you still want to be planning so that you have enough money when that happens to move into the facility you want to be in. Be able to be on a waiting list long enough to get on the facility that you want to be living in. And so this planning is key.
Yeah, choices, yeah, planning is key to have it, whether it's self-funded, it's Medicaid funded, whatever plan you want to do. But just know what those options are. I've had people come up and said, well, my children will take care of me. I said, that's great. Do they know that? Because if they don't, then you might want to have that conversation. They may come back and say, nah, I think we're going to have some long-term care. Having gone through that personally, both parents are in assisted living right now. The last thing I ever wanted to have to do is to go in and help with showers and do all this sort of stuff. It's allowed me to stay their daughter, and I can help orchestrate the care, but I'm not actually physically, and it helps save that relationship.
You also see couples will say, well, if something happens to him, I'll take care of him, or something happens to her, he'll take care. But what we see a lot of times is with one couple needing long-term care, the caregiver, their health starts to drain down. So it is very important to make sure if I need long-term care, if that's a piece of my plan, and how am I going to pay for it?
Sounds like the best thing to do is to put in your retirement account for your future and how you qualify for your endeavors, right? College,
I would say always, there are different tax advantages. So a lot of financial planners talk about diversification on your assets. there's also diversification, tax diversification amongst the different types of accounts you have. So having a good diversification between like a Roth IRA where you've already paid taxes and it goes in, and you take it out without taxes, an IRA where you've got some tax advantages when it goes in, and then you have to pay taxes when it comes out, or a non-qualified account, maybe a joint account with your hubby or an individual account with yourself, where you pay taxes as you go along. A good mix of all three kind of prepares you, because we don't know what's around the next corner with regard to income tax either, so you have to kind of count that in to effect too, how that's going to affect your long-term plan.
So correction, it sounds like the best thing to do is have a financial plan. I do have one question. What age would you say, or I heard one of you say, you don't have to have thousands of dollars to come see a financial planner, and a lot of times that's what people think. But let's say someone just got their first real job and, they're wanting to really plan out their future as far as retirement and buying a home and all these things, life insurance. Is there a minimum? It may not be a minimum for you, or is that across the board? What would you say to those people who don't have any savings or may not have an account, a retirement account? Maybe they just, like I said, got that job, got that 401k. What would your advice be to them?
Each individual company may have their minimums, but I think most of them have some sort of format for any level. I mean, you have your wealth advisors that won't take anybody that has less than a couple $100,000 or, that sort of stuff. But, to be honest, those people starting out, if you can start them out properly, will be so much further ahead than the people who don't come to us until they're in their late 40s or early 50s. And then we have to go back and go, okay, what haven't we been doing during all of this time there? So if we can start good disciplines and good habits. I love when the 20-somethings come and say, I need to, what do I do? And you're like, oh, great, you're multiple. Okay, this is what you need to, this is your way.
The consultation fee is worth it.
Yes, and sometimes the consultation fees usually are free. You can come sit and talk with us. Maybe if there's a plan in place, there could be a cost to it or a cost to whatever the product is. And that's first, wherever you go, different, but it's worth having the right advice rather than listening to, the neighbor and may not know anything. And that's usually where we wind up hearing it is most people go and says, oh, well, my uncle says I should go do this. I said, is he a licensed, financial advisor? Oh, no, he does plumbing, So, just be careful on who you get your advice.
But, there's actually, so there was my grandfather was wanting to get his teenagers and their teenage grandchildren into, they have these little jobs where they were earning little bits of money, but if you wanted to introduce some of the ideas, so basically, and since I don't have to charge to meet with them and get them started, it's really kind of nice low bar to get started. And it's just a matter of the people that I want to work with are people that are wanting help on how to set a goal and reach it. And so there's really no minimum as long as it's somebody that wants to set a goal and reach it.
Yeah, hopefully someone who wants to be proactive with their finances versus reactive. I have no minimums either. And most advisors, even if they have a minimum, their consultation is free. Gives you a chance to get to know one another. And I have lots of people who come to me and they walk away with some good information they can put, in act right now. So it's always helpful, from basic budgeting to millions of dollars and everywhere in between. Yeah.
I think they'll all say the sooner the better.
Yeah.
It's the same amount of money at the age of 20 versus 30. It could cost you $500,000. Yeah. So, sooner the better.
Sarah? So, right now, as to wonderful COVID, we have a lot of homeowners who are earning on their mortgages. Are you able to address that? Are you being commercial? I mean, are you seeing that in commercial realms too?
We're doing what? Mortgages?
Temporary.
Temporary.
Are you seeing that in business?
Yes.
And given that, I want to give a shout out to Harvest Time by their lunch today, Harvest Time International. And they're also coming to, I think, small business or you can, help support small business. So, but are you seeing that kind of a trend in businesses, and how does that kind of affect us after we're over COVID, change guidelines?
Yeah, so we, March came around and we, we actually reached out to every single commercial client that we had and just said, hey, we're here for you, tell us what you need, we want to, keep it updated as far as how your business is going. We did have a limitation, we kind of offered a deferment if they needed it, in 3-month segments. The regulation in the state on commercial loans that if you have more than a 6-month deferment, then it is considered like a special asset where luckily we haven't had anybody that's needed to kind of step over the line of a 6-month deferment. What that does, it just causes more, we have to check in, more than just annually, depending upon the loan amount. There's more regulations, there's, just, it's not a win-win for the client or us, as far as how we have to adjust our books, and then we have to bother them more for information. So, interest is still earned by the financial institutions during the deferment. So you kind of have to weigh out, if I have a 6-month deferment, depending upon your loan size and your payment structure, I have one client, he owns a hotel, his 6 months of deferred interest, it will take him, if he doesn't make any more additional minimum payments after the 6-month deferment, it will take him 21 months to start paying a principal payment. So, it's just important to have a discussion with your banker and find out, okay, how is this really benefiting me? Where am I looking at paying, starting paying down principal in the future? So.
Yeah, it's personally, I had to do, we have a commercial property fund, and I think the biggest thing we did is we went in and renegotiated interest rate.
Yeah.
Because like the previous fall, they had just, this is a 5-year balloon, so every 5 years they renegotiate they just locked us into like almost a 6% interest rate. We were able to knock it back down to 4s. And just, but we reached out and said, hey, what can you do for us? Because I see, interest rates are much lower. I don't want to do PPP loan. I don't want to do, any of these other small business loans for that. But, extra couple $100 a month that doesn't have to go out would help. So, and then that's now locked in for 5 years. So it helps.
Right. We were the rates are lowest they've been in, I don't know, 10 years. Yeah. So, it's not unheard of, but we have done modifications, there's a fee just to modify, we just give them the market rate and lock it in, for that 5 or 7 years, and then it will reset to the market rate in the future.
Once we're talking about rates, what are your magic ball predictions as far as interest rate levels? What do you think we're going to do in the next 6 months? I know we don't see the future. I think it's not going to be decided.
I'm getting my 8 ball out. So.
I don't, personally, a lot of people ask that question. We're just like, we all wish we had that magic 8 ball, but I personally don't feel like interest rates are going to move for at least another 12 months. You guys,
I would agree.
The federal bank keeps coming out with statements trying to reassure people and give it like a 2022 date, if I recall correctly. And so that's kind of what the base is coming from. So they may not, they can always change their mind, but it causes people to not worry too much about the rates going up. Or to worry that rates aren't coming up. It depends upon your perspective.
Yeah. And I think low interest rates are really good for loaning your people just starting out and everything. The last thing you want to see is 15% mortgage rates. for that, where it hurts is the people who are kind of in a very safe environment, in that sense. There are other things that can be done with it, so it's not necessarily a bad thing. And, the Fed's gonna move that, based off of what the economy ends up doing. So as things start to open back up, see a little bit of inflation.
If I may mention, SBA rates are like record lows. So you're looking at, or you're talking to a family or friend that is looking at purchasing real estate or equipment for their business, their own business. SBA 504 rates are just below 2.5% fixed for 15 to 25 years. It's absolutely incredible.
What is SBA?
So SBA is Small Business Administration. It's government-backed loans. You do need a financial institution. I love helping my clients with 504 loans. I just had a lady the other day say she's actually expanding her restaurant, which, we looked at a lot of items, and she's called her bank, and her bank is not offering any commercial loans for restaurants, just given the COVID. So we talked about an SBA loan. Looking at her financials, there again, it helps to, actually a realtor referred her to me. But SBA 504 loan is where the financial institution that we work with holds a first lien to the typical structure is that financial institution holds 50% of the loan amount. Then the SBA will hold 40%, and that's where you get the long-term low, just under 2.5 right now, fixed rate. What the benefits are of 504 is that long-term fixed rate on the 40%. In addition, you get to include, furniture, fixtures, and equipment, renovation, closing costs, and then it's only depending on how long you've been in business, 10% down versus typical 20% down.
So anyone has any questions or needs, all these ladies are fellow members, so you can look them up in the GAWN member directory, and you can email them right in the website directly, or email them outside, but all their contact information is in there. So let's give them a round of applause. That's good stuff. I'm taking notes. I have 2 kids in 9th grade and one in college. My stepson is in college and my oldest is finished. So I hear bright futures. I'm like, woo. All right, so this concludes our meeting today. As I said before, we will be back at Sweetwater next month, and we're also going to be having a social on November 5th. The details are on our website, so be sure to go in there and register, bring a guest, bring a friend. Like I said, it'll be outside, and try to have a little holiday cheer, if you will. So thank you all for coming, and we'll see you next month, hopefully.